Hello, everybody. My name is Mike Fairbourn. Nice to have you here for Markets and Sectors. Today, I want to take a look at just that, markets and sectors, specifically, though, highlighting some of the areas within sectors that are showing strength relative to weakness. What might we have that's really been showing gains relative to other performing sectors, and really what's behind those sectors? Where are we seeing the strength at? In addition, I did want to take a look at uh, setting up a process on a 1 through 4, kind of denoting it 1 through 4, +4 or -4 in terms of the market itself, in terms of kind of a fear and greed index. Just had an idea about including a few different indicators together and sort of building our own sort of indication there. So I want to go ahead and take a look at that today as well. Joined in the chat by a good friend of mine, colleague Connie Hill. Folks, any questions, comments you have, throw those in the chat so we can address those for you. I'll keep an eye on those as well. But it is great to have Connie here, and great to see all of you as well. Well, with that in mind, let's turn over some disclosures and get the show on the road here. The information provided here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paperweight software application is for educational purposes only as well. You can see some additional details listed right next to that too. All right. Investing does involve risk, including for some products, more than your initial investment. Now, there are a couple of notes here just on futures and futures options. Just want to get you familiar with that. That trading does involve substantial risk. It's not suitable for all investors. There is a risk disclosure statement for futures and options listed right there. I did want to bring that up because sometimes we do reference, though, futures trades because there is volume associated with them, and we might just look at the charts. But that's the extent of what we do here. Okay. Finally, here, I wanted to note that past performance is no guarantee of future results or success. And having said all that, let's go ahead and take a look at our markets here and get everything up and ready to go. So, first off, looking at the S&P 500 index, a little bit sort of interesting. I've gone ahead and started off today. Just wanted to begin with the market forecast and looking exclusively, really, at that intermediate term line and just seeing if we are getting strength or not, kind of helping us get a better sense of what we're really getting on this chart. This is a kind of an interesting looking chart. I almost said trippy looking chart. It is kind of trippy, but I mean, we did break into a new high range over here. And actually, let's do this. Let's just go ahead and zoom in on it right there. That's a new high. That was an all-time high in the market with the DeepSeek gap. We had another gap on some of the tariffs concerns right there. But we had this really interesting sort of a, clear these off here, just kind of show you, but we dipped down. We closed the gap and then we dipped right again. We gapped down, we closed the gap, and then we had another big red candle. But folks, we've gone sideways through here. So the question is are we seeing strength, or is this a plus or a minus here? Well, let's look at it this way. First and foremost, just broadly speaking, looking at the markets, one of the first things you want to ask yourself is are we currently holding gains in the market? Are we holding our gains? We had bounced all the way down to this short-term low. It was short-term in nature, but we did have a pretty good solid trend line break right here. We extended higher, and we've been holding much of those gains. In fact, one thing we can do to help us get a sense of that too, that I think is really useful, just go ahead, go right down here at the bottom of the screen under the drawing tools and click on the Fibonacci ratios to see that relationship. Let's click off the bottom here, pull it to the top. Do you notice that we didn't even close? We did not actually officially close below the 50% level right there. Do you guys see that? We didn't close below there. We tested it, but there are actually even some Fibonacci trading techniques that are out there that are employed by a number of traders and even investors that say if I'm in sort of the scenario of a setup of a trend going higher and there's a bit of a bull flag here, and I happen to dip below that 50% level, but I don't go below, I do not close below the 61.8. So we're just using Fibonacci's here, but the 61.8 number, and there's the 50% number. If I go below the 50, but then I retrace back up above the 50 without closing below the 61.8, because a lot of times traders will say that, well, their belief is that the expectations, some would even use the word probabilities, and the way they like to use it would suggest that if you go below the 61.8, then it's just more likely that you will get a decline in the trend. But if you go below 50 and you break back up above the 50, like we're seeing right here in this example, for example, and we're getting over here, then actually, as soon as you dip below the 50 and you get literally just one tick above that level, in this case, literally 1 penny above, some traders would buy there. They would call that a buy signal. That would be a buy, because we did not close below the 61.8 that you could see right there. We only went below the 50 and we came back up above it. In other words, it looks a heck of a lot like a flag pattern, and we're getting a little bit of an indication that that flag pattern may be ready, it's a question mark there, to go higher. That is the real question. It passed that test thus far, and we are holding this gain. Now, the one thing we do have to address is we're looking at the markets. We're kind of saying, hey, is it going to be bullish? Is it going to be bearish? Look over here with me. Lower highs, lower highs, lower highs. Indeed, lower highs. We had lower low, but a lot of times a trend, right? A trend has to begin either with a higher low, which we could be seeing here, or a higher high. In this case, it may in fact be the higher low that comes first if in fact we're ready to move and go higher here. Okay, that's the question. We're kind of trying to determine what's going on, but the markets just seem to be holding up pretty well thus far. Here is the NDX. I mean, even better in a sense, very similar though to the S&P 500, but we're very, very close to our prior highs over here. So we're holding that range. I don't want to say better. I'm sorry. It is not better. We did not make a new high here like we did on the S&P 500 index. So I take that back. I'm sorry about that. But we are holding a longer range, kind of like this. Like if I just flip over here to, let's see. If I flip this to a weekly, and you'll be able to see this a little bit better. There we go. So a weekly chart, I'm just going to hit, look at this, just this weekly right there. Can you see the possibility of the bull flag right there? Just a slight I mean, there is the possibility of a bull flag that we're seeing. In fact, here's your move up. I know it's a weekly. In fact, it's a 5-year weekly, and I've zoomed in on that. But what that does is it collects for us more data to view this in a weekly format. So each bar is weekly. And then you see the possibility of a flag pattern here. I mean, yeah, I mean, we could see something like that. In fact, one way to kind of detect that possibly a little bit early, maybe to tap into something like, I'll go back to a 1 year here, but just do something like this. I mean, it's been a downward trend. It's been sloping sideways, but if we were just put like a standard sort of a trend line on the top, that trend line's been getting some pretty good activity there. I mean, of course, we got our starting point at 1, but then you've got this 2 or 3, about 3 touches there. And we have maybe 3 more touches over here. We kind of got close to it again today, and we're just kind of sitting below it. So a break above here could also be a positive. But yeah, it did not get a new high like the S&P 500 because, well, we've seen leaders. How much can we expect from these technology stocks? We've expected a lot from them in terms of leadership, but maybe it's time for some other companies to take the lead that we might find in a bigger basket of companies out here in the S&P 500. In fact, you could see that we are actually holding, I mean, we broke above these highs here. So we'll see what happens there. Okay, now a couple of things to take a look at. If we look over here, this is the market forecast. I'm so used to the RSI being down here, but I'm just using the intermediate term line. And this is used as a guide for prices when they do get above 80. And we're just about above that 80, right? Well, we are actually technically above 80. It's roughly through here. Let's say there's a line through there at 80. I'm going to put a red line down below to represent the 20 level. But how traders will trade this is if we can hold above the 80 level, then the way that some traders will use this, and investors, is that the market forecast is giving, it's giving sort of like its indication, is the way that some traders will use it, that it's okay to look for bullish type trades. And I thought it was really interesting to kind of view the S&P 500 right in this context because it is a little bit fascinating. This pattern, you don't see it a lot, but like I said, it might be easier understood with a larger time frame like a weekly. But what was going on with the market forecast? What does its strength look like? Well, it's holding above the 80. As long as we're above the 80, then it's bullish regardless of the direction of the line. I'm going to take these off again. I'm going to expand this so you can see it just a bit better. But if I go like this, we're above 80. I mean, we dip down below, but it doesn't matter the direction. I know we're slightly down here, but according to market forecast, which tries to capture strong trend type moves, and you can see that right over here. Look at how we held above 80. What was the market doing over at this time frame when we got above 80? Pretty good activity. Yeah, I mean, it was trending. And it says, hey, even though there are dips in here, these are the ebbs and flows of a strong market. A couple beautiful flag patterns in there, actually, for the market itself. But we had that additional confirmation down through here. So go back and test this for yourself. You can look back over long stretches of time, and you can see if this is an indicator that might make sense to you, something you might want to consider. Here was a good stretch, too. Look at this. Really, with one little teeny exception, right there dipping below 80. Look how long we held above that level. So it just said, hey, market's giving the go-ahead. It's showing strength, except for that one little dip right there. But we bounced back probably within a couple of days or so. Okay, now if we do go below 80 and the line's pointing lower, it says do not take any long-term positions on the market, according to the way we're kind of describing this right now. Now, again, to get to this indicator, because it is a really, really cool guide and really easy to use. And in fact, it is kind of, well, I'll say it this way. It was developed by our group, and so it is exclusive to Thinkorswim. It was put on the platform. And I'm going to go ahead and pull it up over here, and I'm just going to show it to you right there, market forecast. What I'm using, yeah, you could just type this in over here to the right on our wheel. Just simply, take out, there are ways to trade these shorter term patterns. I'm almost always just looking at the intermediate term, though, right there. And all I've done is make sure that show plot, that show study is on, and you got it right there on at your fingertips. But it's normally used, I mean, some people will use it for stocks. Let's just see what it looks like on Tesla. Tesla might be bouncing today. I saw it a little bit earlier, and it is. Curious if we get a more of a follow-through day here. But as an example, you see Tesla's way down here on market. Now, it's normally used for markets, but some traders will use it as a strength indication for stocks too. But it says don't even touch it until it gets above 20. Now, if it gets above 20, the line itself has to still be pointing higher. It's got to be in an upward trajectory as we're extending above 20. Okay. In other words, if we're above 20, but we're still, it's going down, it's not giving a go ahead for long trades on the market. Okay. I'm just using it as kind of a long trade, sort of a guideline at this point in time. All right. So that is that. Hopefully that's helpful, you guys. Let me just see if we've got any questions. Let's see. It works until it doesn't, lagging. Yeah, it's kind of a longer term gauge on that. And so keep that in mind, but it can be effective, if you, I mean, I'll just use it on markets here, but it is interesting on Tesla because it's just a 1 day bounce. You get a downward move. It's actually looking for a little bit more confirmation in here. So it is based on price action, but it's a combination of basically indicators that kind of highlight that price action. Is it showing that strength in terms of a stronger trend or a weaker trend? Things like that. So that's really what's going on behind the scenes on that one. All right, well, let's do this. I'm going to take a look at the VIX so we can get an eye on the VIX here. And I want you guys to think about this. I am not going to use the market forecast line, though. So let me just go back over here. I'm just going to go into something like this. Yeah, and we'll just go back to a VIX here. Okay, fine. Here's the VIX. We're not going to really look at the RSI, but I'll just pull this down right here on the VIX itself. Now, a couple of things to note on the VIX. What I wanted to do today was really just try to employ an approach where we can kind of create, and what I'm going to do is I want to work on getting a new indicator in place for you guys. on Friday for in the ThinkScript class that is going to be a fear gauge indicator and one that you can kind of develop your. I'm going to have the tools that you can kind of develop one yourself as well. There's going to be some variables, but today I wanted to talk about one that I had in mind and just kind of highlight this here. In fact, I'm going to keep some notes on it here in just a second. We'll put these out just in a Word doc just to kind of highlight on a blank screen basically what's going on. But my first one I wanted to look at is actually going to be the VIX. Okay, so a fear greed indicator in the market. Where do we stand on a market sentiment sort of an indicator? So what I want to do today is take a look at the VIX and talk about that for a second. I want to use more recent history in how we might devise a fear greed indicator, or you could say bullish or bearish in a lot of ways. Is the market risk on or risk off? Greed would be kind of a risk on. Fear would be kind of a risk off. But notice over here, one thing I'm going to do is I'm going to take an area where there's a lot of resistance coming in. Let's say right through there. And when we got above that level, we actually saw some pretty crazy moves in the market. Now, this was obviously a key one here. And by the way, this was a big key one right there. But we know there's an inverse correlation with the VIX. And let's say, for example, the S&P 500, as we're looking at market volatility, a read on market volatility. When we get above these levels here, above 20, there is more, you could say, fear or risk off in the market. In terms of the bullishness, right? We get a little of some spikes in here we really didn't hold, but I think that's a really interesting area. In fact, what I wanted to do was basically say, are we, there's maybe kind of a no man's land range in here, but generally, if you are greater than 20, that could be more in the fear side. We're building this indicator. And, let's say, for example, less than 15. Now, there's just kind of a middle range in there where there's just not maybe a lot of action going on. It's just kind of a neutral area. But there could be more greed, in other words, upward moves in the market, perhaps, if we are below that 15. Now, let me kind of highlight this. There's a lot of different touch points over here at 15. Some of the longer extended moves in the market, though, occur. I mean, just these long, strong trends when you dip below the 15 as of the last 1 year on the VIX. And I like to kind of adjust it. So I want to make this adjustable for us to sort of look at, but that'd be kind of a 1 year time frame that we're looking at here. So greater than 20, less than 15. Where would we stand right now on that? Well, we are kind of in the middle ground, so we're really not going to give it a number. It's just going to be a neutral number. It's just going to be 0. So it's not going to add a -1 or a +1. A +1, of course, would be up top here. This would be +1. This would be -1. Okay. And we can look at it that way. Where are we at? We could flip this around as well if we wanted to. We could just invert these two, but it depends on what we want to show as greed or fear. Do we want it to be a +1 or a -1 or whatever the case might be? Actually, you know what? I'm going to flip these around. I was thinking about that a little bit, but maybe on the greed side, we're looking at pluses and minuses on the fear. I mean, that's just kind of the last thing I'd note. Okay, so let's do that. I'm going to go ahead and just share this on the screen, and we'll type this up right now and get it in place. So sentiment indicator. So just kind of piecing together some ideas on how to create one. The VIX over here, as I mentioned to you. So I did say, let's see, less than 15. Oh, sorry, less than 15 or greater than 20. All right, now right now we're in between that level, so this is going to actually account for a 0 mark as we look at it. Okay, so that's 0 as it stands right now. Now the next indicator I want to take a look at that we could kind of focus in on here would be something along the lines of just a moving average on the S&P 500 index for strength. Okay, look at it in terms of strength. So some of the key ones we could look at is like, let's say, a 200-day moving average. That would be actually a really big one. If we wanted to make it a little bit shorter term, something that's also used that's, let's say, part of a golden cross would be a simple moving average on a shorter term basis, and that is going to be the 50-period moving average. Let's go ahead and add that in right now. So I want to kind of give you guys sort of a background and sort of what we're doing here, keeping an eye on it, looking for strength or weakness. But there's your 50. It's kind of close. But I mean, if we were below the 50, which we were on a couple of days here, it might be showing weakness. Somebody could use the 200, but we'll say this, at least on an intermediate term chart, we're saying more bullish rather than bearish right now, or more greed than fear. There's more strength to it. Okay. So we are above that. So what I wanted to do was go back over here and we'll pull this up. The next one is just going to be a moving average. And like you could decide what you want to do. We're going to be using the 50 period. And, are we greater than, I'll just put it here, greater than the 50. That would be bullish. If less than, then minus, or greed, whatever the case might be. In this case, it's going to be a +1. I've only got 4 indicators. They're kind of broad. They're totally different from each other. But let's just go ahead and take a look at the chat and see if we're all on the same page here. I was going to do this before we look at our other indicators, because it's going to be a fun one that we could just use. I think it's going to be pretty good, too, in terms of basically getting us, the sentiment indicator is going to vary from -4 to +4. +4 being the strongest, -4 being the weakest. Now, as I'm going through this, you might be thinking of other indicators that you guys could piece together yourselves. But the whole idea is to kind of get a general sense of, hey, let's just do this numerically. How much strength do we have relative to how much weakness we've got right now? So right now we're just, simply a +1. All right. So the next thing I wanted to do is I did want to do a put to call ratio. So, and the put to call ratio, you can find that over here. And what this is, it is showing there's an anticipation for strength or weakness on the put to call ratio. Let me show you this over here. It's under the Market Watch tab. You've got to go to Market Watch, a couple of different things. Now, we are using the S&P 500 index to take a look at this right now. So there's your S&P. There's your put to call ratio in total on the market itself, the S&P 500. So we've got the totals right down here. It is a 0.82. And what the put to call ratio looks at, it looks at puts relative to calls. In fact, you've got the ratio or the relationship right there. Puts over calls. Now, we have a good sense of what that's going to mean. If we look at the put to call ratio, what are we seeing if it is below? I mean, if puts are outpacing calls, then there's an anticipation for bearishness in the market. It's a totally different sentiment indicator, but that's the whole idea. We wanted to get different sort of sentiment indicators here that are unique in and of themselves. So the higher the put to call ratio, the greater the fear. So if it's above 1, if it's greater than 1, we'd be looking for more fear in the market. But we are less than 1. And because it's a bullish indication, it gets a +1 read, because over here, the read is +1, because we're looking for, greater than 1, but we are less than 1. So because we're less than 1 at 0.82, it's more of a greed indicator. Greed, bullishness. Okay, fear, greed, we're there. It had to be greater than 1 to be fear. And so what you're doing is you're getting just a larger number of individuals in the market that are buying puts relative to calls. Okay, and a lot of times what you'll get is you're getting large institutional money out there that starts to really get concerned about what's happening in the market, and they'll just start buying massive amounts of puts, and that would be a read that there could be weakness on the horizon. So this will spike, and you guys can have, you have it right there. I don't know if we have it over here. Let me just check on one area. I think we could have it. No, we don't. Do we have it? We might actually have it over here on the chart. I'm not sure. Put, no, we don't. No, we don't have anything there. Okay, so that's where you find it, though. I knew it was there. Have to always check, because they do put additional information in there. as we go through it. But Chris says, hey, Mike, doesn't the VIX reflect the put call ratio essentially? I think there can be some correlations to it, although I have seen the put to call ratio spike, Chris, early before the VIX moves up. And I actually seen one or the other. But yeah, they could coincide, but they're not like necessarily fully connected, right? One can lead the other clearly. I've seen that before. But I don't know if you have though. But yeah, just a thought there. Okay, so let's go ahead and put that down. That's going to be a +1. So we're going to go ahead and keep on building this up. So it's going to be the put to call ratio. Puts on numerator, calls denominator, put call ratio right there. It is currently less than 1. So that's going to be a +1. So right now we're up to +2. Okay, as we go through this right now. All right, the next thing I want to do is I wanted to look at the advancers relative to decliners. There's a lot of different indicators we could look at. We could throw in another one in here, but something relatively different. Is it done on a day-to-day basis or not? That's one thing we could do. Normally, I was looking at putting a moving average on the advancers and decliners and just seeing if we're still seeing advancers outpacing decliners. By the way, though, this was actually another area where we could actually see this. Again, what you have to do when you go into Market Watch, I've got to repeat this, sorry. So Market Watch up top here, then visualize. Sorry about that, folks. I didn't quite get through this the first time fully. Market Watch, visualize. Then you need to change the visualizations to Index Watch. Okay. Key point. Index Watch right there. Instead of the heat map, because you're not going to see it on the heat map. You got to go to the Index Watch. And then, last but not least, you've got to go over here and pull up your watch list. And in this case, we're just using that for the S&P 500. And actually, I have to denote that over here because it's the put call ratio. These are SPX, S&P 500 or SPX. Yeah, for the index itself, because everything is based upon that. The VIX is referencing, the S&P 500 index, the moving averages, the put to call ratio is, and the advanced decline line is as well. Decline line. Now, I'm going to revert back now to our, by the way, this is going to be greater than the 20 DMA, 20-day moving average. If it's greater than, then that would be a +1. We are currently above that. I couldn't get the indicator moved over to show us that moving average on there. I can get that though very quickly. It's just I couldn't find it. I've actually already built it. I don't have time to just create the code on it really quick. But I can do this. Let's go over here and I'll show you our market sector review as we look at the advanced decline line over here. Okay, so here are our advancers and decliners. This is actually on the NYSE. Now, I can have one, we can use the S&P 500 one as well. I can reference that, which I do have, but at least we have a visual here, advanced decline line, NYSE. And you can see it does give us a day-to-day, but my whole idea here is to plot a moving average on it. We are actually above. I'm going to kind of draw approximately where it's at, the 20 period moving average. It's just kind of creeping up, but we are above the 20 period moving averages. In other words, it's watching very closely if we start to break down or not, because that can also be a sentiment indicator. Okay. And by the way, we're on a couple of these, right on the verge of a couple of these flipping. We're very close on, the moving averages are very close at a 50. We're very close on the put to call ratio, and we're very close on the advanced decline line, but we are hanging in there. We're also, actually, as we looked at the market forecast, we're just above 80 as well. So it's still bullish, but keep your eyes on it type of thing, because it could flip here is what I'm seeing as we're looking at this. Okay, we didn't have any negative reads in our sentiment indicator here. Okay, do you guys find this useful and helpful? The whole idea for me doing this is I'm just trying to get you thinking about ways to think about, going through and looking at different indicators and seeing how they might, it might collectively point towards bullishness or bearishness. You finding this helpful? Hope so. I'm gonna build it into an indicator, and I will have too. If there's any that come to mind right now, throw them into the chat. Any different indicators that you'd want to have on here? Because I'm gonna have it kind of like an indicator that you can adjust, like in the gear window, and it will do the pluses or minuses for you. But it could be really cool and giving us an idea. But currently we are equal to. Currently we're at a +3. Okay. Currently a +3. So it's actually just one notch below the highest in terms of just this four easy methods. Excuse me, these four, pretty straightforward sentiment indicators. They're different, I think, different, unique from each other, different enough to take a look at. By the way, there can be variations here, right? I think this is really interesting because we're mapping out how we decided on the sentiment indicator is what the VIX has been showing us. It's really been kind of spiky and a lot of fear, a lot of weakness in the market, like sharp dips when you get above 20. Okay, in the middle of the range, it's neutral because there's just not a lot of neutrality. And you can see that in the market. We've stayed in the middle of the range and the markets have been flat. They've been going like this. That lines up very nicely with this range that we're taking a look at. But we created that just by looking at the VIX, kind of letting the VIX talk to us how we're going to create that sentiment indicator. Next up, 50-period moving average. Some might choose a 100, a little bit longer. I'm using really it's sort of like short-term to intermediate here. This would be more like intermediate to long-term, and then the 200 would be kind of a long-term. All of these could be, any of these could be referenced. I did everything here a little bit shorter term in nature to match a short to intermediate term time frame. Okay, put to call ratio, less than 1. We got a +1 or a -1. I realize there could be a range around there, but it's either one or the other. And watch for spikes there. And then finally, advanced decline line. That too matches the short term, ST for short, to it's more short term, but there could be early stages of IT as well, the intermediate term. So keep that in mind as we got our +3. But that's, when I describe this, it really is giving us a +3 based on short term to intermediate term. We have a couple of those that show that specifically, the moving average as well as the advanced decline line. That really gives us kind of our time frames more than anything. So we do have that aspect. It's pretty interesting in that regard. Okay, so there we go, +3. Now let's go back and just explore the market here in that context. Now that we've kind of walked through that a little bit, what that could look like. So it still is a +3, and I think that does look kind of reflective. I got to be careful in terms of just, anything can happen. And I try to note that for sure. Things can change quickly on this number. I mean, if we start to break below that moving average, which might be around here somewhere, I think, it's not going up yet. I'm going to redraw that. The moving average is not going up. It's just kind of like over here. It's just kind of holding below the price, but it's sensitive for a possible breakdown. So does this kind of line up a little bit with where we are right now? It's saying a good number, +3 on our sentiment indicator. In this context, it was an all-time high. Can't forget that high right there. And we are holding above the 50% level on the pullback. Trend line break. So far it says strong, but now that we build our own indicator, we also get the benefits of knowing how that indicator works because we were the ones that built it here. And we realize that it's a +3 according to what we're using, but it could change quickly. And that is valuable information. It's knowing the indicator itself. All right. Now that I've said that, I want to hit a few of these just in the time that we have remaining that we normally go through. And thank you so much, Connie, for helping out in the chat. I think you did fantastic on those questions. Thank you. And by the way, thanks, Connie, for also noting that the survey time, as she's mentioned, survey time is here. And yeah, folks, yeah, if there's something you found useful or helpful, would really appreciate if you're able to fill out that survey. Just lets me and my manager know, because my manager does look at each one of these, and just I think there's only 2 questions, so it's not too hard. You can click on it now, but you can do it later, but you have to actually click on it during our discussion. So, and while I'm at it too, if you find today's discussion helpful, smash the like button or subscribe on the bottom right-hand corner of the screen if you're not already a subscriber. Now, let's go forward here. Let's look at the McClellan oscillator. McClellan says if we did get below our 70 right there, which we did, we got above 100. So we went above 100. Prices went above 100, and then they went below 70. And about right there, that gave us a good indication that we've got about 2 to 3 weeks, according to the McClellan oscillator, of possibly a sideways move, but not directional to the upside, sideways or down. Well, we got 2 to 3 weeks. I'm going to try to draw that better. Part of that is me sliding off the side of my desk, my mouse here. But yeah, 2 to 3 weeks of a sideways to a downward move. Okay, 2 to 3 weeks. Okay, so we got that there, right? We got the 2 to 3 weeks. We're kind of close. So if we get past that, it's really interesting. If we were to take out a trend line here, well, would that be in the direction of the trend? It absolutely would be. Now, I put a question mark because it hasn't done that yet, but maybe there is some strength to do it, but we're also pretty close to intermediate to short-term weakness that we need to be mindful of. Okay, I will say the McClellan oscillator is kind of flattening out a little. The summation index is flattening out, but holding in there nonetheless. You're going to see this for sure. If you get a sideways range for 2 to 3 weeks, this is going to go sideways too. But yeah, kind of an indication of what's been going on in the market. Now I'm going to come back over here, and I'm going to scoot on over into the equal weight. Sort of a bull flag still off the bottom. We did break above these highs, and we're sort of developing a higher low over here. So this was sort of a higher high. It was, I mean, technically from this high. This would be a higher low question mark. We won't know if it's a higher low until we break above this level, but it seems to be holding in there okay. Not too strong in terms of the RSI. We are less than 50 on the RSI, and that's more of a bearish, bullish above the 50, bearish right now. But I will say, always look at this in the context of the move. It's really kind of a sideways move here, sideways to down, but we would probably be expecting a move to come fairly soon too, if it's going to come. Traditionally too, as I bring that up, I'm just going to go forward one more, actually a few more. Traditionally on a seasonality pattern, we will oftentimes historically get a run up through March, and that mid-March sometime has historically been a high range. In fact, I'm going to prove it to you guys right now. I'm going to show this. This is really interesting, but I don't know if you knew about this, but you can click on the wheel up top right here, and you can scoot on over to appearance, and notice over here it just says display the average of the last 10 years. You guys have been hearing me say that the coronavirus situation destroyed March, because normally March is a really good year, and it did. In fact, if I show you the yearly or the yearly plus the average under appearance, shoot, it's going to give us 10 lines. Now, notice how many lines here. I'm going to prove it to you that the coronavirus, that once in 100 to 150 years, and I hope it's that long again or longer before we see that occur, but that really messed up seasonality. If you subtract out, and I can tell you which year it is. You want to know which 2020 is? Oh, right there. It's got it up top. That is 2020. Look what happened in March. That was all totally seasonal around that horrible virus. Had nothing to do with normal market seasonality. So I always say put this in context, because if you look over here with me, look at how much activity you saw in March coming up. Look at this. Like I've always said, you tend to run up to mid-March or so. Look at these. How many of them? I'm just going to draw them in a blue line in here. There are so many. I could go back 20 years, even more. There's just a ton of them where that tends to be the case. So keep that in mind right over here in mid-March. If you subtract out something that really wasn't on a historical scale, market sort of normal market related, it totally changes everything. This right here jacked up the 5 to at least 20-year charts that I've been able to pull. It's really, really bad. So it throws it off. But hey, you guys know now, and you found a cool way to really pull that additional data to see it. In fact, there was even this weird, I think every single one of them, and you see that, by the way, this is the average right here. You see the average in that light kind of, it's kind of it's kind of sort of an orange, neon orange color, a thick line there. Look what it did. It actually shows us going down through March despite all of these years because the magnitude of 2020 was so severe. Even this really off year in the market where we were down, look what we did in March. We actually spiked in March. March is only second to November historically for the strongest month of the year. Now, seasonality speaking. Now, that can change, but just keep that in mind. The only reason why I wanted to do was I wanted to tap into this for you all. As we were looking at our original view of the market, right? Within our +3 indicator, it was showing strength. So could we see, according to what we devised, but could we see some strength from March? Folks, that has historically been the case. The second strongest month of the year. You wouldn't know it looking at the average of seasonality. Always be careful with averages unless you can see what that data is being averaged from, because then you get this one totally bizarre year that fell only second. It was just behind the biggest decline, I think, in 1987. In terms of a 1 month decline. It was worse than, I think, the months of the Great Depression. Any one given month in the Great Depression, if I'm not mistaken, was the coronavirus, but only second to the 1987 dip. So anyways, folks, hope you found this informative, useful. A lot of great comments in there. Thank you so much, Connie, again, for your help in the chat. Everybody, again, yeah, if you found, today's presentation helpful, consider giving that like button a smash. That helps create this content come out more frequently in the YouTube channel, as well as to subscribe. And Connie did note, too, that there was a survey link in the chat. She's been so busy answering questions, which I really appreciate. I'm going to try to oh, she already posted it. Beat me again. Okay. Thank you, Connie, for posting that in there, folks. If there's something you find helpful, useful, whatever the case might be, love to see it. You can put comments in there as well. I read every one of those. I'll have a great rest of the day. See you next time.